Hello everyone, in this video we are talking Lucid Motors. They have their earnings coming out on February the 22nd at 5:30 p.m. Eastern Time. That's 1.5 hours after the market closes. So it will be very exciting to listen to see how far they've come and to get some guidance from them about 2023 and hopefully some news into 2024 as well. It would actually be very nice to hear from them. They are a sort of new company to the market. They have very limited production and deliveries, and we want to hear about how that's going. So I have that news waiting for you, and I have my estimate waiting for you. I also have the what they're doing about the tax credit that their vehicles are not eligible for, and then also what the professional analysts have to say about their earnings estimate. We'll compare it to my estimate, and then finally, what's the options market currently showing about their stock price, and what does it say about the expectation for earnings coming up this week. Last thing, if you want to hear more of my commentary and see more of my products and services, there is a link to my Patreon down in the description. Click it, sign up. Meet us over in the private Discord, and we can chat there, and you can also watch my Patreon exclusives as they come out. Very excited about the growing community that we have over there, and I hope that you would like to be part of it. That said, let's move right into the content. So the very first thing is that Lucid is a luxury vehicle brand, and being that their vehicles are over 80,000 US dollars, they are not eligible. Not a single model from Lucid is eligible for the EV tax credit. So Lucid is doing whatever they can to make sure that they can capitalize on customers looking for the credits that they can't get through tax credit. Lucid is offering their own. I think it's a smart move on their part to make sure that they stay competitive within the market. However, being an early company as they are, the fact that they're still trying to build out, that's going to be fairly expensive to them at a time. They don't have Tesla's pricing power where they can just slash vehicle prices. They need every penny that they can get coming in from the vehicles, and part of that is people even buying them in the first place. So is it a smart move for Lucid? Honestly, it's a move where I don't know that they had the choice to make, and I'm glad that they took this choice because I do like the Lucid vehicles. I don't own one myself, but if I could own one, or if I could at least have the opportunity to drive one, I would. I'm a little bit too practical for something like Lucid, and those Lucid Sapphires should be hitting the road this year, and they are over 200,000. Matter of fact, I think they might have a $250,000 price tag on them. 0 to 60 in under 2 seconds, 0 to 100 in under 4 seconds. These things just, they can blister down the road at over 200 miles per hour. So even though that might not necessarily be something that's useful or practical, I don't think people buying these are looking for usefulness or practicality, that they're looking more for the prestige that comes with owning such a vehicle. Let me move on from there to what I have in terms of their earnings estimate. So here, I shared this before when there was the talk about the PIF possibly acquiring it. That was the rumor that was coming out, and so I cooked up my own little estimate to see what we have here, and there's some interesting things. So delivery wise, they were able to deliver 1,932 vehicles in Q4, totaling just over 4,000 deliveries in all of 2022. And it's funny when you look at the headlines because it says that Lucid exceeded their expectations for 2022 for their production numbers, because at first it was 20,000, then it went down to like 14,000, then that got cut in half further down to 7,000. So while it is true that they exceeded the 7,000, they fell shy almost by 2/3 from what they were originally estimating. So that's something I think is going to be vitally important to them for 2023, is getting those production numbers up. And I've been saying 7,000 produced, and yet the deliveries are only 4,000. The other part of that is actually distributing, getting those vehicles out and making sure that there's not a demand issue for Lucid Motors. That's going to be critical for them and for investors following along with Lucid as they move forward from here and as they grow as a company. So the revenue that they brought in, and this is an estimate. See, I have the E up here at the end of 2022, and it's the 3 months ended in December 31st. So this is for the fourth quarter of 2022. I estimate, based on their delivery numbers, that they'll bring in about $273, almost $274 million in revenue. And that's quite a bit of money, but it is costing them quite a bit. Just the cost of revenue alone, I have that over here on the chart for you. Right now, their cost of revenue is increasing, and I actually made it, and it's only with a few amount of data points. So So given the data that I have from Q1, 2, and 3 for 2022, I made their revenue compared to their cost of revenue, and I put that into a graph. And even though there's not a statistically significant number of data values here, you can at least see the sort of trend that they're on. I made it linear, even though with a little bit this way here, you could argue that possibly it's even curve. But we'll stick with linear for right now. And the important thing about this, I have it down here in yellow. And this was in my previous video that I put out at the end of January. So just their cost of revenue is $1.84 that it cost them to bring in $1 of revenue. So plus $100,000 on top of that. I'm sorry, $100 million on top of that. That's much worse. So it is expensive, but this is something that is expected for an early stage car company. It is very, very capital intensive. It is a very high barrier for entry, and that's why a lot of new car companies don't make it. And Lucid is currently in their proving ground stage. So they have their AMP1 facility, which is currently being brought up to max capacity, which is said to produce at 90,000 vehicles at scale in 2023. So I don't think that they'll produce 90,000 because they're supposed to hit that ability to produce 90,000 in 2023. I think that it's going to be less than that, but Lucid has not given us that guidance. So expect that to be something less than 90,000. They have an AMP2 facility that's being built in Saudi Arabia that will not be completed until at least 2025, and that's as per Lucid. So we also want to watch that take place. So cost of revenue, matter of fact, their cost overall. So cost of revenue, their OPEX, their CAPEX, all of that. It's going to be a huge cash draw, huge cash drain. And that actually brings me to another point, and then I'll come right back to this. And that's what we had in their last investor presentation, that they have enough liquidity to see themselves through the end of the fourth quarter 2023. Now, since that time, I believe that they did raise more capital, that they have more cash than what this currently shows. So I think that happened in December. And they also mentioned about their OPEX and CAPEX and their production facilities that are taking place. It's expensive. And seeing themselves through 2023, when we're in 2023 right now, they need to make sure they're getting those capital raises done early. That's why we saw one happen in December. Likely there'll be more share dilution taking place, more capital raising that takes place throughout 2023 to ensure more of 2024, 2025. And that's something that we do want to keep tabs on, especially if we are invested in Lucid. I'm not currently invested in Lucid. I did sell out of my position several different times, as a matter of fact. My favorite time was during the big run-up, but I also sold. I repurchased after that, dollar cost average for a while, but I did sell out for a time, I think maybe around the $19 mark. I would have to go back and check that one. So in my earnings estimate that I have, I figured that they would lose about 38 cents per share. And, take from that what you will. That is as of February 17th close of $10.93. That actually brings us down to the price to sales ratios that I have here. And based on delivery estimates that I projected, based on not what Lucid has said, this is just based on production capacities and deliveries, based on the ratio of deliveries and production that we have. I made some delivery estimates, and these are wildly subject to change. So take them all with a grain of salt. So assuming they're able to meet these delivery numbers, that they're able to not only produce, but also deliver on that many vehicles, and that demand holds out through these years. I mean, depending, there's so many variables in this. It's subject to change wildly. I do just want to show that right now, they're sitting at a price to sales, from what I have, for 2022 for the estimate for the entire year of 32. And that can drop wildly if their delivery numbers go up. So that's also something that we want to watch. Now, that's different than price to earnings because they're profitless, so you can't do a PE ratio on this. Being pre-profit, knowing that it's capital intensive, really still needing to prove themselves for demand, that makes this a highly speculative asset and not necessarily a value stock. It would be considered still in the high growth, high risk area. So please, if you are going to invest or trade in this, do so carefully. So I have a loss right now at 38 cents a share, and as of the current quarter for December 22, we have 4 analysts reporting on Yahoo Finance here, and there's 4 estimates. The average estimate is a loss of 40 cents per share, the low of which is negative 45 cents per share, and the high estimate is negative 37 cents per share. We'll see how that goes. I do fall right in between them, so I don't think I'm that far off of the earnings estimate. we do want to hear from Lucid. A miss is not going to be great for them. If they give poor forward guidance from here about their delivery numbers, that's not going to be good for them. So we're going to be on the lookout for how we think their stock price is going to move based on the earnings that they get. And I guess I say that through a trading perspective. Because for me, I think there's opportunity coming up for their earnings, to trade their earnings, because I think that there's going to be a large shift in the prices in those after hours on the 22nd, which means on that 23rd, on February 23rd, that we could see a large price difference from where we're at the day before during regular trading hours. Is that movement going to be up or down? According to the options market, right now there's a higher ratio of calls to puts, or I should say their put call ratio is less than 1, which means that there are more calls currently out in the market by volume and by open interest than there are to puts. So that would mean people with these options, trading these options, have more of a bullish bias to the stock, and so we're going to have to watch that. If we look at the near-term contracts that are closing out on February the 24th, the weekly contract, that has a put call volume ratio, so just what was traded on the last trading day, of 0.65, and a put call open interest ratio, so this is the number of total open contracts that are out there. It's about 2 to 1 calls to puts, or a 1 to 2 puts to calls, however you want to say it, that there's about twice as many calls out by open interest as there are puts. So we'll see if the options market is correct on earnings. As we get near to that, we want to watch how that changes to, especially the volume ratio that we have leading up to the 22nd before the market closes. So the last thing I want to do is I want to look at the chart for Lucid, and they are going to move wildly based on rumors and speculation. It happened back when it was Churchill Capital 4, CCIV was the ticker, when they entered the market via SPAC, and you can see the incredible wild ride that the stock price took up. I think my position went up 200% since I bought it at around $18. I think I sold it at around $54. Actually, I think I sold 2/3 of my position and held on to 1/3, and then I sold the rest of it at around $30-some per share, and then I bought back in the 20s, and then I bought back in as it started to drop down through the teens. And I don't remember, like I said, I don't remember exactly what that cost basis was when I closed down my position. I think it was somewhere in the high teens, $18, $19. But I have not reopened a position yet, and I don't plan to invest in Lucid right now. However, I am okay trading the earnings on Lucid. So, and I'm only speaking for me personally. I can't speak for you. Always do what you want. But I do want to look at the near-term price action. And I said speculation, rumors are the things that are really going to keep Lucid moving in their prices that we have. And you can see back on January the 27th, this is when the rumor came out about a possible acquisition by the private investment fund out of Saudi Arabia. That was a big, awesome day for Lucid. And, some people, may have jumped in at the end of that. And then it came down and it sort of settled over time from there as the excitement died down. And now we're sort of boiling down to earnings. So the market opens again on the 21st of February, which is a Tuesday. So the 22nd is a Wednesday. So we'll have to watch the price. We'll have to watch the markets, what the market bias is going into earnings for Lucid, and also watch the earnings to see if they have a big beat on earnings, a big beat on revenue. They have excellent forward guidance. Those are all things that we want to watch for. We also want to watch in the event that they miss on earnings, that they miss on revenue, that they miss on production, that they say that there's going to be delays. I think that there's going to be fairly wild amount of movement with the stock price. And so I think for the options then, even though I don't know which way it's going to go, up or down, if I bought all calls and I was right, that's something that would allow me to benefit probably pretty greatly from a sudden move. If I was going to go with puts, and I'm being very, very general here and oversimplifying, if I bought puts against it and the stock went up, well, then I'd be out a lot of money. So there's risk. By taking on that big risk of gains, then I also have the big risk of losses. That's if I go one or the other. There is something that you can do called a straddle, and really you don't want to jump right into options because they're even riskier than just messing around with the stocks. Matter of fact, just holding on to an option, if it's something that you bought, will lose you value over time. So just by having it, you're already losing money. So you got to be careful with it. There's a lot to know, and it can be pretty exciting. It can help you look for opportunities, and that's where learning really comes in, because that learning is going to open up more opportunities for you over time and allow you to see them as they come along. So if I do trade this, if I decide that that's what I'm going to do, the most likely thing that I'm going to do is trade it using a straddle. So a long straddle, I should say, because I would be buying calls and I would be buying puts at the same strike price with the same expiration date, expecting a large move in either direction. And what that does, it does two main things. One, it protects me from big losses, assuming that there's a big move in the underlying stock, Lucid stock being that underlying stock for the options. The other thing it does, and this is something that people find unappealing, is that it keeps me from making a really big gain either. It washes out some of the gains that I could have had I taken on the bigger risk. So think about it this way. If you could make a consistent 10%, 10%, 10%, 10%, 10%, nearly every time that you trade. Now, mind you, that's unrealistic. It's not that easy, but if you could do that, would you take that repeated 10% versus a coin flip 50-50 of making much larger percents but also losing much larger percents? Honestly, I would take that consistent 10% guarantee every time. Now, mind you, with the straddle, there's no guarantee of profit, because if the stock price doesn't move enough, I lose a lot of that money. I'm only profitable if the underlying moves far enough in either direction. So let me give you some concluding thoughts on Lucid. Lucid makes beautiful, gorgeous cars. They got really long battery ranges. I think they're industry-leading ranges on their batteries. I believe they're also highly efficient. It's supposed to be an absolutely amazing experience driving, and it better be luxurious for luxury prices for a luxury brand. And I think there's a lot of potential for them to build out over time. As far as being an investor, I would like to see some traction, some positive traction made from where they switch from spending more and more money and going deeper and deeper into debt to switching to losing less and less over time as their production and delivery numbers increase. So as they mature as a company, that's something I really want to see to be convinced to be an investor in Lucid. It does not mean, however, that I am not willing to take swing trade opportunities, option trading opportunities on Lucid as I see the moments arise. As for the earnings, options say bullish, at least as far as I can tell. For me, I'm really unsure. I think it's too close of a call for me to really make. It really depends on a lot of guidance that we get from Lucid. There might not be that great of a change from what they experienced in the end in Q4 in 2022 into Q1 of 2023. And we also don't know how much is going to change for them in terms of production and deliveries throughout the rest of 2023. We're going to have to watch and see that play out to really know better. And because I have all that uncertainty, the most certain that I am is that I believe that there's going to be a big movement in their stock. I don't know what direction, and so that's why I'm proceeding the way that I am. If I do decide to trade, because at this point I have not done anything to trade or invest in Lucid since I last sold my position. So that's what I have for you guys today. I hope that you enjoyed this video, and if you do enjoy my commentary, check out the link for the Patreon down in the description. You can support the channel further that way. You get access to the research and my Patreon exclusives that I put out over there. Also, you can join my private Discord and interact with the community that I have over there. And I'm in that community very, very often. And I absolutely love interacting with people and talking with other people who are interested in investment, finance, stocks, crypto, you name it. Just come on over and we'd love to have you there. If you want to do a few free things, you can do this. One, hit the like button if you liked it. Subscribe button if you'd like to see more of my videos, and the notification bell to see anytime that they come out. There's also some links down in the description that you can find where not only does it benefit this channel, but it also you pay yourself by doing them. So find those links down in the description. Thank you very much for watching this. I really appreciate it. I'm Dr. Stock, Doctor of Education. We'll see you in the next video.